Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla and let's go over the market and figure out what is happening in the market today and well, what we can expect moving into the final week of the month and next week. It's kind of a half week, if you will, for at least July. But yeah, just all that being said and done, let's jump into it. I am recording a little bit early. I do have something later on, so I have to record about half an hour earlier than I usually do, but it is what it is. Regardless, Tesla seems like it'll be closing somewhere around flat on the day, which is going to be putting us at pretty much around $220 per share, which compared to the market is obviously a bit of an underperformance, with QQQ and SPY up just a bit over a single percentage. So let's talk about it. Let's figure out what this means moving forward. If you enjoyed, don't forget to hit that like button. And of course, my membership section on YouTube is live. The link is down below in the description of the video. If interested, you can access all my intra-day thoughts, posts, updates, technical analysis, options flow, etc. on Tesla, sometimes other stocks as well. Just $3 a month. Link is below in the description for that YouTube membership. Definitely check it out. But jumping into it, let's talk about it. So what does this mean moving forward? Well, thankfully, this video is going to be pretty simple because, well, not that much change from yesterday, right? Yesterday, of course, I talked about how the most important levels right now are to break one of the two levels above or below, 225/226 roughly, and about 115, ish. We'll say, obviously it's not exactly like, oh, you go to 114.9 or something like that, and suddenly it's all over. No, it's not always that simple, right? But just those general levels, right? Again, if we go to the 1 hour chart, you can see it a little bit easier here. You can see we kind of bounced around in between them, right? But essentially, if we break below pretty much again about, did I say 115? I meant 215. 215 versus about 225, 226, something like that. That's where you want to start, being a little bit more careful, I guess, or a little more cautious, right? So just look for those levels, right? But again, we pretty much bounced in between them. In this morning, we had a nice little rally. We came up to the top side of it, pre-market especially, right? Pre-market, if I look at pre-market here, you can see we came up right into it, got rejected by it, slammed back down, pretty much came all the way up to the other side. And then we, of course, found some support, bounced up somewhere into the middle, and now we're going to be closing, it looks like, somewhere around that middle of this range. And it's really just that simple, right? At this point, it is pretty simple. So again, we break above 225, 226, we most likely head our way back up. Where do we head back up? Well, in my opinion, I think we'll head up most likely pretty quickly. I would actually think it's pretty quickly too if it were to break to the upside, to about mid to low 230s is my first level, right? That'd be the first level I'd look for. Why? Well, pretty simply because if I go back to the 1 hour chart, you can see, this rough like mid 230s level right here, you can see acting as a support several times, right? In the past, obviously coming back up to retest that. We have the gap filled at 239. I don't know if we'll get that far right away, but I'd look for about mid to potentially low 230s, depending on when it actually does happen. That's the first level I'd look for to the upside. If we break that, we'll talk about that one, and if, of course, it happens. But if we do, obviously, this means that we're most likely breaking out of this bull flag, which would be very, very bullish, naturally. Now, the other option is, of course, well, okay, let's assume we break to the downside. Let's say we do lose 215, 216, 214, just somewhere at that general level, right? Let's say we do lose that level, like 215, we'll say, right? Where do we go next? What's the next level? Well, in my opinion, I don't know if I like this level I have here. This one's a little mediocre. I'm actually going to... I'll keep it, whatever. But honestly, this is a minor support. It's like 210 to 211 area. I think we'll go there at least. But personally, what I'd be looking for, as I zoom in a little bit more over here, is most likely going to be a retest back down to about 205. I think 205 will be that next level that most likely will get tested. That should be that bottom of the bull flag roughly, right? The very low 200s. And that's going to be a very crucial level. Why is that going to be a crucial level? Well, for many reasons. First and foremost, right, if I zoom out like this, you can see, right, what happened, right? Let's take a look at the, take out the drawer here. Ever since we, started zigzagging like this, we kept zigzagging, right? And what do you notice about this little trend right now? While I'm drawing this right here, what do you notice about this, right? Every single time, starting from up here, pretty much all-time highs, I think it was, right? No, not all-time highs. This was back when we were at pretty much $300 per share. Ever since up here, right? What do you notice about this, right? Constant lower lows, constant lower highs, just in sequence, lower low, or low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And what changed, right? What changed? Let me go back here like this. What changed over here, right? We had this massive push up from this 140 range, and we went up here. Okay, we broke this high. We talked about this. We talked all about this when it actually did happen. I'm just kind of reiterating the overall structure. And then what happened? We came back down. What happened here? We didn't go lower below this. What does that mean? We set a higher low. What does that mean? We set a higher high and a higher low. That's a change of structure. That's a break of trend. That means that we're no longer in this bearish trend. That's a good sign. What happened after that? We push up even higher and set up a fresh higher high, right? Now, granted, it is the same high as this one, but it broke these two trends down here of the previous higher high, or lower highs to a fresh higher high. So keep that in mind. That's important to understand this, right? And so us breaking this is really, really important. Now, what is the next step usually, right? What do I always say? Whenever you break out above supports, resistances, whatever, what is very common to happen? Doesn't mean it has to happen right away, but what's common for it to, at some point, end up doing? Retesting that level that was old support or resistance. And that's kind of what we're potentially going to be doing here. If, of course, we break below that 214, 215 level, right? If we do break below that, again, I personally believe making our way back down to somewhere around this kind of 205-ish range right here will be really important. In my opinion, worst case scenario will be closer to, not worst case, but the realistic worst case scenario, for now at least what I'm expecting, will be pretty much $200 per share. $205 to $200 per share, I'd expect. Why is that important? Well, 200 roughly is just a psychological level. Number one, psychology is important, right? This market is also based on some form of psychology. But this level here, you can see acted as a support here, acted as a resistance here, and we acted as a resistance right around here, this 200 to 205 level. This was the level that rejected us several times, but this was also another major level for us to break in order to really break out of this lower highs, lower lows trend. Like that really, really made things a lot more convincing. So coming back down to retest this general area all the way over here is just something that, you should be expecting. And again, it doesn't mean it has to happen, but in my opinion, if we do lose that 215-ish range, it'll happen. It'll most likely happen. We most likely will lose that level, and we most likely will come back down there to about 205 to potentially 200 to retest that range overall. That's kind of what I expect as of right now, if, of course, we lose it. Now, let's go over to the weekly chart. Now, obviously, the weekly candle hasn't officially closed, but I mean, it's pretty damn close. We're about 20 minutes away. I don't think it'll change much from what it is right now. What is the situation that we have here as I take a sip of water? So there's a few things. This is where trend lines come in again, right? We know about this trend line we've been talking about for quite some time, right? This trend line, this multi-year trend line. Now, this is the kind of my issue with trend lines. If, for instance, we draw the trend line like this, I kind of redrew it a little bit. If you notice, the difference here is the fact that I'm touching as many candle wicks as possible without actually breaching any actual candles. Some people, when they draw trend lines, what they do is they purposely draw them to touch as many candle wicks as possible and as many candles as possible without actually violating any candles. In other words, without going through them. So for instance, a way to violate this, just to give an example of what it can look like, if I were to violate this, let's say I wanted to touch this wick all the way down here, right? I go like all the way like this, for instance. Well, this doesn't make any sense because now we're going through all these other candles up here. You're violating those candles. So you want to be touching as many candles and wicks as possible without actually violating through the candles. For instance, something like this right here, you can see kind of makes sense. We're touching a lot of candle wicks. We're not going through any actual candles themselves. And it kind of gives this trend line a bit more, what's the word I'm looking for? I use this word in the morning with my members. I forgot what word it was. Validity, I guess, right? More validity, because there's a lot more, the more candles that are touching, the more validity it offers that, yeah, this is the trend line. Yeah, this is the resistance, right? Pretty simple stuff. So if you were to redraw it like this, well, congratulations. This subjective trend line, which trend lines, in my opinion, at times are subjective, has officially pretty much been the absolute perfection of a retest of this multi-year trend line today. Today and yesterday, I guess, the lows we had today and yesterday were the pretty much absolute peak perfection of a retest of this trend line. That's, of course, if you draw like this. Obviously, we used to have it, and I'll show you what it used to look like. And the way I usually like to draw them personally, I usually like to draw them like this, or at the very least, if you really want to give it a little bit extra wiggle room, like this, right? I like to be a little bit more, I guess, less lenient about it, right? Less lenient in the sense that, like, I really want to see it break above, or I really want to see hold above certain levels. So for instance, I would usually draw things like this. Now, naturally, you're not touching these candle wicks over here. So, technically gives it less validity, if you will, but this really convinces me if you can close above this, the fact that, yeah, we're probably good to go, right? Unfortunately, this level will require us to close above 225. So that's why, again, there's a lot of subjectivity when it comes to trend lines. So if you're someone that likes to, give it as much validity as possible, touch as many candle wicks as possible, it would look something like this. And pretty much the move that we had this week, really, to come back to retest this has been so far successful. We're holding back above it. We could come back, of course, next week once again to test it a little bit as well, pretty much around the same level. But keep that in mind. That's important to understand. Just the nature of these trend lines, if you will. So, take it for what it's worth. Now, weekly over here, you can see, MACD still feel bullish. MACD still looking great. No concerns there whatsoever. RSI is looking all right? We have the stochastic. The one thing that's really concerning here, in my opinion, stochastic has to be bearish for, not necessarily bearish, but the momentum has slowed down. The momentum has absolutely slowed down on the stochastic, right? Technically has, I guess it is technically bearish. There's some concern there, right? You have the BX trender showing lower lows on the weekly, a little bit concerning. So, there is a bit of a momentum slip here for Tesla, right? There is some momentum slip, but again, it's a weekly, right? These things take a long time to play out. Even if we have this, right, doesn't mean we can't still get that rally to 235, for instance, right? Just because this flip here like this, again, weeklies take a much longer of a time frame to really play out what they're showing. Doesn't mean that with a daily can't still have this rally back up to, let's say, 235 or maybe even higher. We'll see, of course, we'll see. But again, the daily, when it comes to these same indicators, MACD is still bearish, RSI is kind of slightly bearish to neutral, stochastic is still bearish, BX trend is still bearish. The momentum is still not there. We definitely want to see, at the very least, in my opinion, the stochastic flip bullish on the daily. Once we can see that, that should be pretty damn good, right? The 1 hour is looking a little bit more promising. We have the MACD on the 1 hour showcasing, some bullishness. MACD is looking pretty decent. RSI is looking like it's wanting to wake up. Stochastic is flip bullish. BX trender is looking pretty decent, making higher highs. So the short term is actually looking pretty decent. Looking like it can potentially actually get us a rally, and maybe we can break this 225 and then make our way up to about 235, low 230s, we'll say. Keep that in mind. That's important to understand. So that is a very real possibility. And again, you might be thinking, okay, but there's so many mixed signals. Does it make any sense? I mean, daily looks bearish, for 1 hour looks bullish. What does that even mean? But again, remember, these longer time frames, the only way for these longer time frames to turn bullish is for these shorter time frames to lead that charge, right? Think of it that way, right? It's almost like, I don't know, maybe like you're playing chess and the 1 hour is kind of like that pawn or something like that. Or like, it's the piece that sets up the larger pieces, right? The larger pieces, the more, long-term impactful pieces, the daily, the weekly, they only get influenced, for instance, to turn back to being bullish, by the shorter time frames, like the 1 hour, to set that momentum going, or to get that momentum going, to get that bullishness started, and then that can translate into the higher time frames as that goes. You know what I mean? Hopefully that makes sense. But that's kind of what I see right now. The short term, yeah, you know what? There are some decent signs here on the 1 hour that, may give us some potential signs of a relief rally from this massive sell-off post earnings. That's pretty decent to see, and I like that. So again, to make it super simple though, just if you want the easiest answer that you possibly want, again, like I said, break above 225, 226, we see 235-ish. Break below 215 roughly, we most likely see 205, 200. That's it. That's all you really need to know moving forward, in my opinion, into next week. Let those levels decide it for you, and now you know where it most likely will go once those levels are breached. Otherwise, we're in a congestion. At some point, this will break. Let the levels decide for you. In the meantime, I'm just selling options for now. But I do expect, if I had to pick a direction, I am slightly leaning more up than down from here. But again, we'll see how it goes. I have buying power for lower, but I have enough shares that if we do go higher, I'm happy with what I got. That's my position right now, and that's how I'm looking at it. So with that being said and done, ladies and gentlemen, let me know what you think down below. We had some nice calls come in for Tesla. For instance, we had a bunch of 325s come in over here for Tesla, right? Where is January, February, March? I'm like really bad at remembering that. When I see like 03 or 04, I'm like, is that March? Is that April? Is that May? I always get them confused. I don't know why. Anyway, March 21st, 2025, 325 strike, a decent flow of options came in over here. There was another one as well. I believe it was, can I click on the date actually? No, doesn't do that like that. So there was a lot of flow essentially coming in for that date though. Let me go ahead and go over here for Tesla again. It was for March 21st that I saw as well. Somewhere down here, I think it was this one here. Yeah. Okay, well, that's not gonna, I guess that's a standalone. It's a little bit different, but where did it go? Right here, 1.26 million, 340 strike, March 21st. Pretty much $800,000 right here, 345 strike, March 21st. Almost 600,000 here. Also, 325 strike, also March 21st. So some calls came in for these kind of dates right now, which is pretty nice to see, right? Tesla nowhere near to be found on the bearish flow, on the daily, on the bullish flow. You can see here near 3 million, which is pretty good to see. But again, you know how I am about options. I like options. I look at the flow. I think it's important, but it is definitely not what I personally base my main trading thesis off of. It's just a supplementary. That's how I look at option flow. That's just my opinion though. Anyways, that's kind of what I'm seeing right now, ladies and gentlemen. Let me know what you think down below. Thank you so much for watching. I'll see you for the next one. Peace.